Welcome back to In the Street Trades, where we give a blue-collar view of a white-collar world. My name is Rob, and today with me I have Vince, and we're going to do something a little bit different in this video. We're going to be discussing something that's kind of a common hiccup or a misstep with new investors. Now, I don't mean to call them out on it, but Vince up there is what we call a novice investor. He just recently started in the past?
About 6 months. Yeah. Well, I really came into it last year. Well, I really got interested in it last year, March 15th, when COVID hit, and out of boredom, I like to gamble. Well, here we go.
He entered the casino. So
yeah.
Interesting statistic is they've had there's been a 16 to 17% increase in traders because of COVID, and those traders are retail traders. So this is why I feel this is an important video. Now, one of the common missteps early on is when you come into the market, you're seeing people talk about making gains. You see a bunch of videos out there like, follow this stock, do this, we're chasing this is popping, right? But when you're first starting out, a lot of times you don't know what you're looking at. You don't know what you're looking for.
Yeah, agreed.
And what I find is you end up chasing the hype. And sometimes when you chase the hype, if you don't know what you're doing, you get caught in a situation where you become a bag holder. You are underneath water, and you're forced to stick out with this stock because you don't want to lose money.
Well, the hype is exactly what happens when you're starting out. It really is. I mean, a simple Google search, and you get more sales pitches than you do stock information most of the time.
Right.
Or at least that's what I learned. So.
And again, you watch the videos or you listen to people talking about this stuff. They are chasing stuff that they already have a better understanding of. But when you're starting out, you may not know these indicators or how to work the news versus the hype versus a chart versus earnings and so forth. So one of the things I challenge you to, and it's something I challenge any new investor when I'm talking to them, is I'm like, all right, so obviously, you keep asking me about this stock. You keep asking me about this stock. I'm like, how did you get there? And usually it's like, well, I saw it on this.
Google.
Yeah. Well, I was on Webull this morning, or I was on Robinhood. I went to top trending stocks, and it's like, okay, let's pull back for a second. Yeah. So my challenge to you was, what are you interested in? What do you know a lot about? What is your hobbies, right?
I believe when I think I asked you the question. I'm like, okay, how do I find a stock?
Right.
And your exact words to me were, well, find something you're interested in.
Yeah.
And I'm like, that should be easy. And it kind of was, kind of.
So what we're gonna do here is like what I did is kind of an experiment. So one of Vince's biggest interests that he told me was sports betting. And I'm like, okay, so I want you to dig into a few sports betting stocks and then come back to this video and tell me what you found, right?
All right.
And the reason I did that is I want to see what you, the novice DD, due diligence, deep dive looks like, and maybe give some pointers on what to look for. So what was the first stock you looked at?
I will start right from the beginning. I go into Google and I type in, sports betting stocks. And there's probably about 6 top ones going on right now. You had Churchill Downs, which I didn't know. They're publicly traded. Their sports book is publicly traded. I wasn't aware of that.
I didn't know
of
that
course,
either.
everybody else. No, I didn't know at all. There's DraftKings, which is huge. Penn National, Caesars is another one. These are all the top ones that came up. And the biggest problem I had with them is a good portion of them are over 200 a share. And some of them are around $50, $60 a share. Well, once again, novice. Do I really want to hop in like that? So the biggest one that stuck out to me was Fubo TV.
Okay, before we
Fubo
go
TV.
Before we go forward with that,
kind of what I found.
Okay, so that is one of the things you see is like when you are first searching, you only have a certain amount of money that you're dealing with, right?
Exactly.
Okay, so
or what I'm comfortable doing, because I'm new. I know I'm new.
But you also are looking for a return on investment. Now, one of the things that I always tell people is like there's a difference between being a trader and being an investor. Okay, you can be a trader once you build some capital through your portfolio, but that usually takes some investing, especially for a blue collar trader or a blue collar investor. We don't start out with 10 grand, but if you you do your investments and you take the time to build it up slowly, then you have some room to start playing around. So whereas let's say DraftKings, I have it pulled up here. You pull it up and it's $48.42 right now. And truthfully, that's actually a little low because they crashed yesterday. But you see that, so you're like, let's say $50, and you only have $200 to invest. We're like, all right, well, I'm getting 4 shares. So unless this thing goes to $100,000 a share, I'm not, becoming my half a millionaire that I want to be, right?
That's right, because it has to happen overnight.
But right, exactly. Now, I don't know if you know this, but like Warren Buffett has a quote that says the stock market is a way to transfer money from the inpatient to the patient. And that's true. That is absolutely true. There's so many times, especially with new investors, where they'll say something or like they'll get into a stock and like a day later, 2 days later, they're like, I can't believe it dropped $1. What am I gonna do? I'm like, all right, well, what are you trying to do is the first
right?
Because go ahead.
The pitfall I fell into right away was just that. When I first started, when I first got into this, I was gambling. It was gambling. Yeah. I was looking at it towards gambling. I was looking at it like gambling. And you, amongst other people, when I started talking strategy, they're like, Vince, that's gambling. Right. The stock market's for investing. So, working with you has helped me switch gears and go in that direction.
Now, again, once you get to a certain level, you can switch strategies to go to swing trading and day trading as you build the knowledge. I mean, there's just
correct.
I mean, there was because you were king of pushing penny stocks. Like you're like, because high risk, high reward is what it is, right? So like there's something appetizing about a $1 stock because like I got $200, I can buy 200 shares. It goes to $10, boom.
That's right. You're set.
But that's very rare.
It's extremely rare. It's very rare.
But I did something last Monday that I wanted to show you, just because like as you learn the system, you can do things like that. So I was able to do that. Right. Yeah. So we were looking at some of the penny stocks, and I was like, all right, well, shoot me over some of the ones you're looking at. You would throw me a ticker symbol. I'd pull it up. I'm like, stay away from that. He's like, why?
That's right.
All right. So there was one in particular, which was
ship
is a containment
SHIP.
Okay. Yep. So it was about $1.08 at the time. And I pull up the chart. I expand it out to the 1 month, and you know what? Let me pull it up here to show everybody. So, Seanergy, huh?
Seanergy. Yep.
Look at that.
Yep. They are a freighter vessel company that transports powdered goods in the Mediterranean, based out of the Mediterranean area. That's what they do.
So I have it pulled up here, and like your basic everyday chart for this thing, you see a lot of what we call barcoding. It's like a lot of real small up and down, up and down, up and down, and it looks like a giant barcode. Okay, and there's not a lot of room to make money on a stock like that. I'm gonna pull back to the 5-day, and actually to the 1 month here, and this is a little bit outside of the window because it kind of already happened. But what I had shown Vince is it had developed at the time a perfect cup and this handle here. And I told him, if you want to get into this just for a quick thing, I will show you how to do it. Buy it Monday morning.
Which I did.
As soon as the market opened, and you bought it at what, $1.09, right?
Correct. Yep.
And
That's
you,
what it opened at.
and you ended up selling it at what, a dollar?
$1.27. $1.27. Mm-hmm.
Which
yeah, I believe it was $1.27, $1.28. I think it peaked at $1.31.
Right. For a quick day trade, that's not bad as far as the percentage goes. Now it's back.
Correct.
It's back down to about 113. So like you still probably would be a few cents, a few percentage profitable. So it wasn't like a total loss. A lot of these things can plummet back down, but that's identifying charts. That's a little bit later.
That's right.
So you dove into this and you found these really expensive ones, these medium expensive ones, and then these more affordable ones.
Correct.
Now, which one did you lean towards? Obviously, I'm guessing probably the more affordable one.
Correct. Yes. Yes, because I know where I sit in regards to knowledge about investing, and yes, Fubo TV was by far the most affordable. They're also probably the newest kids on the block, which I don't know if it's right or not, but I like that. Small company. Well, it's not small by any means, but getting into different things and growing. Well, isn't that how the market works?
Right. What's nice now is like you look at their 1-day chart, it's on a decline because all sports betting has been. And if you pull back to 5-day, it's the same thing. Okay. Let's pull back to a macroscopic view. So the 1 year, this thing a year ago was sitting at about $9, $10 a share. Had a major spike up, and then kind of came back to reality slowly over time because of different news catalysts and so forth. Now,
correct.
What did you read that made you hone in on this one?
Well, for one, in just the last quarter, the fourth quarter of last year, they had $100 million in profits.
Okay.
So it's a growing company, and they're taking that and now primarily Fubo was just a sports TV channel, a sports streaming service is basically what it was. However, they're now going in the direction of opening up their own sports book. So this is going to be a completely brand new sports book. I don't believe it has started. They have started their sports book yet, or at least I didn't find any information that had said that. What I dug up is that they should have their personal sports book set up by the end of the year.
Fourth quarter. Okay.
Correct.
So
yes. Fourth quarter.
I've researched into Fubo TV as well, and like I completely agree with that. Your analysis is spot on. Now my question is this: is granted the other shares are more expensive, so you highlighted something that makes it more appetizing, which is okay. It's not just sports betting; they have another product, which is what their
correct,
which is what their product is, right?
That was their start,
right?
Yes.
So that's their foundation. Now, look at the competition. So you have you said DraftKings. Does DraftKings plan to offer that same service like through television, and with who?
I'm not sure. I really focused most of my research on the company that I was interested in, rather than really deep diving into the competitors. So I'm not sure. I know you could do DraftKings through the app as of right now.
See, and the only reason I bring that up is it's the same thing everybody falls into, and that's confirmation bias. You fall in love with it because you see a couple things. You're like, okay, that's kind of cool. That's kind of look what they. I'm like, okay, well, who else is in this field, and are they? I mean, obviously, Fubo's not the only person with this thought, right?
No.
Do these other people have that thought, and if so, what are their plans? Now, if not, fantastic. Okay, so Fubo has the TV operation getting into sports betting. The other people who have the sports betting need to get into TV. Are they going to have like my first thought is so DraftKings is partnered with NFL, right?
Correct. Yes.
I want to research. I would deep dive and be like, does DraftKings plan to have a partnership with the NFL Network?
Yeah, that's a good question.
That's that going to be something? So this is how deep diving goes, because it's easy to just jump in and just buy a stock, especially when you see a good price for it. Now,
that's right.
I completely agree. I think Fubo TV is a fantastic purchase, because the idea of sitting there watching something like, oh, look at the lines change. Let me put a bet on. Boom!
Let me put it in
right on the screen, right? But the challenge is this: is the main competitors, are they going to offer it as well? Because How many people have the NFL Network? Because let's say that's it. I'm not saying it is because I don't know yet. How many people have the NFL Network as opposed to Fubo TV? And those.
I'd imagine NFL Networks excuse me.
So you'd be able to purchase 3 shares per every 1 share of DraftKings at this point.
Correct.
Right. However, if they're
I gotta back off for a minute, Rob.
Okay. So if their growth is 3, obviously you have 3 to 1 chances. If there's 10% growth on Fubo TV, you're still going to make 3 times more money if DraftKings has a 10% growth because you have 3 times more invested. However, you need to kind of look back at the history of their chart too. Okay, so let's pull up DraftKings again, and what we see is, all right, well, that's the 1 day. You don't want to look at that. They kind of crashed there. All right, so they, over the past year, have had a top of almost $72. So from their current price of $48, you're looking at about a $26 swing. So $26 per share increase. Now, truthfully, like, it's a good buy time if you do decide that this is your company. That the thing is like when you go into investing, you're not just doing one purchase. Okay, so if you can get in at a low cost as your foundation, you're like, okay, I'm gonna put $1,000 into DraftKings. So you purchased yourself 20 shares of it. And each week, you, depending on your brokerage, like if you have, let's say, like a Stash or a Robinhood, you could buy fractional shares, so you can throw $10 at it or $15 at it each week, and it's just continuously purchasing fractional shares, and you're building up your supply. So the price will move and move and move, but over time, stocks inherently do move upwards. So you will have growth within that stock. But if you're waiting just like to pile in and just gonna leave it sit there and that's it, that's not investing, that's trading. And you, like I was telling Vince, you can do that, but you get to that later down the road. So building up that investment over time is what's going to give you that. So ultimately, what I'm getting at is it's not always the low dollar one that might be the best, but your research is the most important thing. It's not just simple Google searches. I mean, I find that going to AMAs on like Reddit with people within the organization, Twitter can be a fantastic resource, reaching out to people and just finding more and more information. So with that being said, I'm going to cut this video short because we're just on our 20 minutes, and I appreciate you guys watching it. You have any comments, throw them down below. We'd love to hear from you. We'd love to do more of these blue collar or white collar view type of thing. Novice investors learning, and thanks again, guys.
All right, got you guys. See you. Bye.